Thank you for watching. This is Lily with Nationwide Real Estate Executives, and I have this amazing lender, Eva Melgarejo. She's with New American Funding. Thank you so much for joining us, Eva. Just wanted to do like a little Q&A because there's been so many questions with everything going on with the pandemic and the coronavirus. So just wanted to answer a couple of these questions that have been submitted. So I guess we'll go straight into it. I will go ahead and ask the first question. I'm sure you will answer these with no problem. So let's see. First question here is there still down payment assistance programs available for first-time home buyers, or has that gone away or been affected because of everything happening?
There is still first-time home buyers assistance programs available, and thank you so much for having me, Lily. Super excited to be with you. So yeah, down payment assistance is still in place. You definitely want to stay on top of those programs just because we have a situation, for example, with CalHFA, their interest rate increased really high towards the end of towards the end of March, and then it dropped again. But what happens is, as you're in the process of escrow, if this is the kind of funding that you're looking for, then you want to be conscious of those spikes because that may throw your buyer out of that particular transaction. You know, if you're paying more interest rate, you're able to afford less home. So when interest rates are going up for such of those programs, and you really have no room to move, you have no space in their debt to income ratio, then that can really be a problem. So just stay tuned with what's happening with those programs, but they're still in effect. What's the benefit? Really, the benefit is that the buyers come in with very little money down. It's usually 1% down, and that's really to cover fees. And you have to look at both. If I'm buying this home and I'm getting this money, but it's borrowed money, it's not free money, then when do I have to repay it? And what's the benefit of that? If I have to come in with 1% and that's going to go all towards the fees versus coming in with a 3.5% or a 3% for first-time home buyers, then that money is going to go towards the down payment of the house. What do I want to do? Right? So it's really important that they're educated about the program, what's available, and also how long, realistically speaking, are they going to be able to close? Because a lot of the times we may think, oh, you're going to, yes, here's the down payment assistance and we'll be able to close in 30 days. And we know that that's not the case. Down payment assistance programs are going to take a lot longer to close. And in this market, it can be a little bit riskier for the borrower.
Okay, perfect. Well, thank you so much. Let me get straight into the second question that I have here. Has there been any changes to the approval process with a buyer through this? Like, have there been changes to like credit scores or?
Yeah. Well, we're in an ever-changing system right now, especially with this crisis. Lenders are tightening their belt and definitely being a little more careful and more responsible when it comes to lending. So that's going to have a direct impact on the guidelines of the loans. And we have that situation with, for example, FHA loan. With the FHA, we used to be able to use a 580 minimum FICO score, and now it's gone up to 620. In the jumbo spectrum loans, you were able to get a loan with 5% down, and it was a jumbo loan. So we're talking $1 million home with only 5% down and no mortgage insurance payment. Right now, you can get that. We have an internal program with 25% down. So 75% loan to value, you have to come in with 25%. And that's still a bank statement loan, but that sector of the mortgage industry has really evaporated. So those are some of the changes. When it comes to the VA loan, it's still a government loan. No changes there for first-time home buyers. But if you are a veteran and you want to refinance your home and be able to pull money out, there is a limit now, and it's up to 90% loan to value. So that's, you cannot have a loan for more than 90% of what your home is worth. Those are some of the changes that we've seen.
A little bit about on the down payment. So some people think that they can come in with 0% down. Some people think that you have to come in with 20% down. Can you tell us the different down payment, like if you use an FHA loan versus you using a conventional loan or a VA loan? How much money do you have to come in with?
Absolutely. So VA loan, you may be able, if you qualify, you may be able to come in with zero down. That's a 100% financing program, and VA loan is through the government, such as the FHA program. So FHA for first-time homebuyers is designed to be able to give that access point to that brand new buyer with only 3.5% down. And then on the conventional side, it's going to require, again, a 620 FICO score now, but you can come in with 3% down. So down payment, FHA is going to be 3.5%, conventional loan is going to be 3%, and then your VA loan can be 100% financing, so zero down.
Got it. Now, some people think that using conventional, you'll automatically have to come in with the 5%. What's the difference between the 5 and the 3% on the conventional loan?
5% and 3% is all going to depend on the basically 5% is going to be if you have already a home. If you're a first-time home buyer, it's 3% down. If you already have a home and you're buying a bigger home, then you can do a 5% down with a conventional loan. The FHA program, you can still do a second home with the FHA program, but you can only hold one FHA loan.
Got it. Perfect. Well, thank you so much for clarifying that for us. And then one last question that I have for you. If this would be for current homeowners that have been affected, their jobs, they have either, lost their jobs or they're financially suffering because of the coronavirus, what can they do to kind of help alleviate the stress that they're going through? Like if they're having issues or struggling to make their mortgage payments, what can the homeowners do right now?
Call your lender, call them, ask them what is it that they're doing towards the mortgage forbearance program. Are they allowing you to maybe put your payments on hold for 3 months, maybe 6 months? Do you qualify? And also understand, what are you getting yourself into? Are you going to have to pay that amount at the end of those 3 months? So if you're not paying a mortgage for 3 months, are you going to have to pay a lump sum at the end of those 3 months? Or is the lender, if you don't have that money available, is the lender going to allow you to put that money and pay it back towards your debt in the next 12 months? So maybe they're able to spread it evenly within the following 12 months. And the biggest question to ask is what's going to happen to your credit? Because let's say that you have a $2,000 mortgage and you're going to put it on hold for 6 months. So that's $12,000 at the end of 6 months. Your mortgage was $2,000 a month. And if the bank is allowing you to spread that over 12 months, then your monthly payment will have to be $3,000. Is your family going to be able to afford that $3,000 payment? And if not, is the bank going to respect your credit, not damage it, so that you can maybe refinance at the end of that forbearance period? So just keep in mind that if there is anything negative on your credit report when it comes to mortgages in the last 12 months, you will not be able to refinance. So make sure that's the best advice that I can give. Please, please, please talk to your lender, understand what you're getting yourself into, and not just put off your payments, but what happens when you do have to pay it
Got it. So you do have to pay it back, right? Because
back.
I guess it's a forbearance, not a forgiveness. We don't want to mix those two.
No, they're not going to forgive or forget that you owe them that money. So just stay educated and ask them what happens after.
Perfect. Well, thank you so much. I guess those were all the questions that I had pertaining loans.
Okay.
Um, so do you have any questions for me? Have you received any questions regarding, the housing or the market or?
Yes. Yes. As a matter of fact, this is starting to be kind of the same question over and over again, and I hear it left and right. So educate us, Lily. Biggest question, is the market going to crash?
Is the market going to crash? Yes,
Mhm.
I've heard that question. I think everybody that I bumped into, they're like, so is the market going to crash? What's going to happen? So, I honestly wish I had a crystal ball to tell me exactly what was going to happen. there's just so much uncertainty happening right now in the market that we don't know what's going to happen. Anybody that tells you this is exactly what's going to happen, yeah, no, there's too much uncertainty in the market right now. What I can say is that, so there's been, in the last five housing, I'm sorry, not housing crisis, in the last five recessions that we've had, only
Hmm.
two has the market housing been affected in a negative way. So is it going to happen again this time around? Because we're for sure going into, a depression, some people call it, um, because of this COVID-19. But will it affect the housing market? That is a very good question. In regards to price of what's happening right now, I don't see pricing dipping. Um, why? At least here in Orange County, there was at least 3 months back, there was so many buyers in the market wanting to buy, and there was very limited inventory. So what was happening is I had buyers, I would, a brand new home would hit the market, and we would go to the open house, and there was 50 other people at the open house. We would submit an offer, and we were competing against 20 other offers, right? So it just created this bidding war where the pricing was getting so high. So what has happened now is people whose jobs been affected that were buying have currently stepped away from buying now. So there's a little bit more room for essential workers that still want to continue moving forward with buying. They're in a better position to getting their offer accepted. Um, but even then, pricing is not. I haven't seen pricing dipped in the past 4 weeks. Here in Orange County, specifically for Anaheim, median home pricing is $599 for that's for an average home. So that's kind of the best way I can answer that question.
Got it. So you're really not seeing prices drop, but you're seeing more people willing to collaborate, less competition, more
Correct.
collaboration.
Correct.
That's really good to
So
me.
if there was 20 offers on the table before, right now you're only maybe competing with two or three offers on the table, but there's still people wanting to buy. So yeah,
So that leads me to the next question then. Should people buy now or should they wait?
I think
They've been
people,
waiting for a while, by the way.
yes, yes. I mean, everybody always asks when is that perfect time to buy, right? Like if
Uh-huh.
there was a perfect time between 2010 and 2012 was perfect time to buy. Why didn't anybody buy in that time frame? It is because they weren't ready. I always say it's whenever you are ready. So if you, who's watching this video, is looking to buy, you have an essential job, your job is not being jeopardized because of the pandemic, then yes, continue moving forward. Take advantage of the low interest rates and buy now. Because what if the pricing does dip a little bit? Usually what will happen is interest rates will go up and then you're going to end up with the same monthly payment, right? I mean,
Hmm. Yeah,
I
it's
would,
one or the other.
yeah. So I would say if you're ready to buy and you have a secure job, absolutely buy now.
Go for it. All right. Now, how do I know if I'm eligible to buy a new home?
How do you know? Contact, you contact
That's a
your,
trick question.
okay, yeah, so just contact your realtor, whether it's me, whether it's, whoever you're using as a realtor, reach out to them, set up an appointment, a buyer's consultation. The way that, we work is it's completely free of charge. It takes about 45 minutes to an hour. You will sit down with me. I will pretty much give you all of the home buying information as far as what to expect on the home buying process. And then you will come in as well, the lender. You run credit, you take a look at their debt to income ratio, and you will be able to tell that buyer if they're ready to buy now, how much they qualify for, and if they're not ready to buy, then you'll say, hey, you need to work on steps A, B, and C. And you'll kind of give them that roadmap and that recipe and say, hey, if you follow these steps, then you'll be able to qualify within 3 months or 6 months or a year. But I suggest schedule that first time home buyer's appointment consultation.
So instead of disqualifying themselves and just saying, "Oh, I don't know that I'm going to qualify," they should really just contact you.
Yes, never underestimate yourself. Prime example, one of our last clients that we just worked with never thought she would be able to purchase,
Mhm.
maybe because of credit or income or whatever the case may be. Just don't do yourself a disservice. Do yourself a huge favor and schedule that appointment. You'll be surprised.
Pleasantly surprised. Lily, those were all the questions that I had.
Well, thank you. Anything else? We're not missing anything.
No, no, not that I know of. I'm sure that as more of our borrowers are stepping into this market, I'm sure that more questions will come up. So I look forward to speaking with you later.
Thank you. Thank you. Yes, guys. If you guys have any additional questions that we might have not covered today, please feel free to contact myself or Eva. Eva, do you want to give your contact information?
Of course, feel free to call me 323-528-4233. Again, 323-528-4233. That's my cell.
Thank you so much, Eva. Have a great day. Bye.
Thank you, you too. Bye.